first. Mr. Clerk, would you please take the roll?
Representatives Carr, Sapicki, Freeman, Hawk, Hodges, Johnson, Lafferty, Mitchell, Powers, Rudd, Smith, Terry, Thompson, White, Vice Chair Rutter,
Here.
Chairman Kumar. Madam Chairman, you have a quorum.
Thank you. Members, do we have any personal orders this morning? I'm going to go first because I can. And I would just like to say that let's keep Chairman Kumar and his wife Linda in our prayers. She is recovering from some recent surgery, and we just wish Miss Linda a speedy recovery. Thank you. Are there any more personal orders? Seeing none. Members, today we'll be hearing from a presentation from the Department of Commerce and Insurance on the No Surprise Act. But first, we have one bill to discuss. That brings us to House Bill 1705. You have a motion and a second, and Chairman Whitson, you are recognized.
Thank you, Chair Lady, and members of the committee. House Bill 1705 is essentially a cleanup bill for the Comptroller of the Treasury. It will remove unnecessary requirements to the Approval Access Tennessee Plan of Operations. The current law requires Access Tennessee Board to submit a plan of operation and amendments to this plan to the Commissioner of Finance and Administration, but also the Comptroller of the Treasury for approval. Submitting this plan to the Comptroller's Office for approval creates conflict due to the statutory requirement that the Comptroller also audits this plan. Removing this requirement that the plan be submitted to the Comptroller's Office will eliminate this conflict. This bill does not delete the current requirement for the Commissioner of Finance and Administration to review and approve the plan for operations and amendments. With that, Madam Chairman, I renew my motion.
Members, do we have any questions? Seeing no further questions, we're ready to vote. If there's no objection, all those in favor sending House Bill 1705 to Calendar and Rules signify by saying aye. Aye. Those opposed, no. Ayes have it. House Bill 1705 moves to Calendar and Rules.
Thank you, Madam Chairman and committee.
Thank you. Now, now that we've completed our consideration of the bills, we'll move on to our presentation. And as the department comes forward, we will go out of session. Please introduce yourselves for the record and begin whenever you're ready.
Good morning, Madam Chair, and thank you for the time to be with you today. My name is Carter Lawrence. I'm the Commissioner of the Department of Commerce and Insurance. I have with me here Bill Huddleston, who is the Assistant Commissioner at Commerce and Insurance. I've got a few other folks from my department, most of whom are familiar faces to y'all. So wanted to briefly speak with you about the Federal No Surprises Act, what it is, what it does not do, and then have some time to answer questions as well. So with that, I will get underway. So generally, the federal law creates new protections for consumers, whether covered under group or individual plans or self-pay, which in this case we use to mean the uninsured. So the law prohibits surprise medical bills when an individual receives most emergency services or non-emergency services from out-of-network providers at an in-network facility and services from out-of-network air ambulance service providers. Through new rules aimed to protect consumers, excessive out-of-pocket costs are restricted, and emergency services must continue to be covered without prior authorization and regardless of whether a provider or facility is in-network. The No Surprises Act also establishes an independent dispute resolution process for payment and reimbursement disputes. These disputes now occur solely between the plans and providers, which I think bears repetition, meaning that the consumers will not actually even receive that paperwork, which I think from our part, we could agree is a real benefit to the consumers to not even receive that in the mail. So the No Surprises Act also creates a new dispute resolution for uninsured and self-pay individuals who may receive a medical bill that is substantially greater than a provider's good faith estimate. Under the new law, providers must give a good faith cost estimate 72 hours prior to the medical service. The good faith estimate becomes the baseline for any future reimbursement disputes. All right, so I wanted to go over some terms to make sure that we're all talking about the same thing, and want to note the difference between balance billing and surprise billing, because not all balance bills are surprise bills, and balance billing is still allowed in certain situations. So as you can see on the graphic, a balance bill occurs when a patient receives care at an out-of-network facility from an out-of-network provider. So for example, if the provider charges $100 and the allowed amount is $70, the provider can still bill for that balance of $30. Contrasted with a surprise bill occurs when a patient receives care at an in-network facility from an out-of-network provider. So in this example, the out-of-network facility-based providers fall under the surprise billing because they typically provide ancillary services, meaning items and services related to emergency medicine, such as anesthesiology, pathology, radiology, and neonatology. The key differential between balance and surprise billing is whether the facility is in-network or out-of-network, with the exception of emergency services. And another key term to talk about is independent dispute resolution, which we'll just shorten down to IDR for the remainder. So IDR is the dispute process that's utilized by the plan and the out-of-network provider at the in-network facility. All right, so this graph is a lot, I know. I'm going to try and talk through just to make sure that we're all on the same page for moving forward. So the graphic demonstrates the IDR process that the group or individual plans and providers will go through to settle the reimbursement disputes. The process begins when an individual receives a medical service from an out-of-network provider at an in-network facility, which exceeds the plan amount. The disagreement between the plan's allowed amount and the provider's requested amount, or the reimbursement dispute, opens negotiations between the two entities. The two groups will then initiate the IDR process, which includes the selection of a third party, which is called the IDR entity for this purpose. Then both the plan and the provider submit their reimbursement offers. The IDR entity will select one of the offers or an alternate offer, which becomes the out-of-network rate for the medical service. Just as an aside, this is what's referred to as baseball arbitration and is what's adopted by the feds in this model. Generally, the IDR process and payments between parties should be resolved 40 days after the initiation of the IDR process. CMS established a rule with a $50 administrative fee for providers and payers that use the federal process, and sets a range of $200 to $500 for the fees paid to IDR entities for conducting a single determination. The qualifying payment, which is the median in-network rate inflated by CPI as set by the IRS, is the most heavily weighted of the criterion used throughout the process. It's also important to note the intensive process an entity must go through to become an IDR. As part of the application process, an organization seeking IDR entity status must demonstrate expertise in arbitration and claims administration, billing and coding, managed care, and healthcare law. They must also submit key documents including conflict of interest, attestation, organization structure and staffing plan, proof of accreditation or arbitration training, fee schedule, and many other items. Okay, on this fifth slide, we'll talk about how this act is contemplated for enforcement. So there are certain items that are granted enforcement to CMS and certain to Tennessee as well. CMS is expected to enforce all of the provider regulations, including the IDR process. Like I said, there are certain provisions within the legislation that TDCI will jointly enforce with CMS. TDCI will enforce cost-sharing restrictions and coverage requirements as held within our current state laws. TDCI will collaborate with the federal government in some instances, namely ensuring that consumers are able to use the Tennessee Health Carrier Grievance and External Procedure Act for billing disputes. All right, so having talked a little bit more about set the terms, go back into the act and talk a little bit more about what it does. And then also I'll get to some of what it does not do. There are certain aspects of the No Surprises Act that do not change, do not fundamentally reform the medical system. The law directs HHS to conduct a study and create a report on ground ambulances, but the law itself does not cover ground ambulance services. The main reason the legislation does not address ground ambulance providers is due to the unique local and state laws across the country. The study and subsequent report are to further inform Congress on the unmet needs across the country. Separately, if a consumer chooses to use an out-of-network provider, The provider must give a good faith cost estimate at least 72 hours before the service is provided. And the patient must also sign a consent waiver acknowledging the out-of-network status of the provider. So in these scenarios, a balance bill is allowed to be sent from the provider to the patient. And some states have asked CMS to clarify if the consumer consent applies to only one procedure or if that applies to all moving forward. And that's something we have not yet received clarity on. All right, last slide. TDCI, just a little bit about No Surprises and what we've done from informing consumers. First, just to brag on us a little bit, we've returned over $10 million to Tennesseans in 2021, and we will continue to seek further mediation efforts to return consumers their hard-earned money when they were wrongfully denied claims. At the beginning of January, which was right after the law went into effect, TDCI issued a bulletin, 2201, to give providers further guidance on how to stay in compliance with the new law. So we've sent the bulletin, an op-ed, many blog posts, and press releases to thousands of Tennesseans so they can understand how the No Surprises Act will affect their everyday lives. And finally, Tennessee will continue to fight for businesses to thrive and for consumers to understand the protections of this new law. And that concludes our presentation. Thank you very much, Madam Chair.
Thank you. I'm sure we're going to have questions. And so first on the list is, I can't see. Hawk. I'm blind. Chairman Hawk.
Thank you, Madam Chair. Commissioner and your team, thank you so much for being here. Let me go back to the flow chart slide that you've got. And as we're going through the IDR process, tell me one more time again, who is the hammer on this? Who's the governor? Is it CMS? Is it Tennessee Department of Commerce and Insurance? Tell me again.
So to be clear, you mean who is the entity that's able to force the IDR process itself?
Exactly.
So that falls under CMS. That is not Commerce and Insurance.
Okay. What are the ramifications of bad faith negotiations going on in this process? What does CMS or what can CMS do if you're aware of the process? What can CMS do in this instance if there's bad faith negotiations on either side?
Yeah. So because Assistant Commissioner Bill Huddleston has been from Commerce and Insurance most directly engaged with CMS on those phone calls, hearing from it. Let me turn now to Assistant Commissioner Huddleston.
Thank
Bill.
you.
Sure. Thank you for the question, Chairman. So, we have been on quite a number of phone calls with CMS about this, and we've had some back and forth correspondence with them. The bad faith negotiations. So as far as that goes, the IDR entity is responsible for it's responsible for making a decision in the case, and they're also responsible for being free of conflict of interest. So as far as the payer and provider, the IDR looks at the information submitted and makes that determination. If the IDR entity itself is found to be a bad actor, there is a suspension process for the IDR entity. And that actually, there's pretty good guidance on CMS's website about the IDR process. It's I could get through it because it was only 48 pages. It actually left out some details, but because it was not, because it was shorter, but it is a pretty good guideline, and it addresses some of that process.
Thank you, Madam Chair. And I may reserve for follow-up, but that's all I've got at the moment. So thank you so much, Madam Chair.
Our next, Representative Smith.
Thank you, Madam Chairman. Thank you all for being here. As you know, surprise billing is a big deal. There are members in this chamber that have surprise bills that are unpaid right now. And we've tried to have a state solution. And so my question is, if the state were to bring a bill this session, next session, whenever, that would address the nature of uncovered lives that don't have an option, or address this from a different angle, what is the department's, position? Would you enforce the state option, the state bill? Would you enforce it at the federal level? And a second part of that question, built into the federal bill is the support of an all payers claims database that is used as a tool to look at rates and equips the independent reviewer. Kind of speak to those two questions, and I may have a follow-up. Thank you, ma'am.
Yeah, thank you. So I guess let me pick up first with the IDR. So we only mentioned one of the criterion that they have to consider, the median in-network rate, but there are lots of factors that they are directed to consider as part of their process for making the determination as to the appropriate amount. And so I think if I'm following with the thread there about all of the other factors, I would refer back to, and I think it'd be appropriate if we could to send to Madam Chair to then distribute out to all of the members what he was referencing about the IDR process and those entities for everyone's illumination. Like he said, it's 48 pages, and so we didn't have time to get into all of that today, but we'd be happy to distribute that. Back to the first part of the question, one of the things that I wanted to do today was talk a little bit about the Federal Act, what it does, what it doesn't do, and in so doing, leave off the question about anything about any potential legislation. I know that this has been a big issue for many years. As a brief aside, I think I'm one of the better educated consumers. And when I had to have some emergency surgery last year, I was laying on the table and I asked the anesthesiologist whether he was in network, out of network. And of course he doesn't know, which was sort of the point. And what am I going to do anyway? Even if he had said he was out of network, I wasn't going to say, no, cut me while I'm not, while I'm awake. But my point is that this is a big issue, has been for a long time, and we want to be engaged. We are really appreciative of this solution, what it means for consumers. Like I said earlier, I think the fact that consumers are excluded from the process is one of the best components of it, that the consumer doesn't actually get that bill. And I hate to hear that there are some in this room that have that. So back to the original part of your question about what would we say? I would love to engage with you on that and to sit down when you have the legislation, take a look at it and opine as to what we think, how it differs from the federal law and what it would mean for us. And so would offer that to you, to anyone else in here, that we would love to engage with you on that.
You're recognized.
Thank you, Madam Chairman. But also, I've got another question, but don't leave off would you support an all payers claims database as a tool that we could use here? But my second question is, this term independent dispute resolution, there is a federal lawsuit pending right now against the federal rule. And that lawsuit stipulates that that the hands are tied of the independent dispute resolution members, because the presumptive rate that will be paid is the in-network rate. So if you wouldn't mind speaking to the record as to, is that something that you believe as the Department of Commerce and Insurance here at the state of Tennessee, that you believe that all in-network rates should be the default presumptive fair rate, and that carrying on with the rule of the Biden administration, that really, providers and patients don't have a real say in this. It's really that is considered the default, and the burden of proof is on someone else rather than it being a true independent dispute resolution. Thank you, Madam Chairman.
You're welcome.
All right. So if I may, let me pick up with the first component where you asked about whether we would support the all payers claims database legislation for Tennessee. I would, and I know it's going to sound like a cop-out. We have no position separate from the governor's position. So this is one where I would have to talk with my boss. I think the general principles, though, about appropriate transparency would be the guiding principle there. And so if he asked me, that's what I would say back. Well, we think appropriate transparency and data sharing would be important and can serve as a really important component for the IDR process and helping them determine where the rates fall and making that accurate determination. So to the second part of your question, and I apologize if I dropped the thread, and please clarify if I miss anything, as to what rate is appropriate. Again, the IDR entity is not considering just one factor. So what I gave the example of the most heavily weighted for the median network is just that. It is one of the factors that has to be considered. And from what I understand from the rules, it is in fact the most heavily weighted of them, but it is not the only factor to be considered. So beyond that, and as to that specific lawsuit, I'm not aware of what the specific parameters are of that lawsuit. But I, for one, appreciate that there are multiple factors that the IDR entity is able and is directed to take into account.
Representative Powers?
Thank you, Madam Chair, and thank you all for being here. I'm actually in the middle of one of these right now, so I do have a question about it. I went to a in-network facility, and then I get a bill from an out-of-network provider, and the bill ballpark figure is like $3,800 total, and they told me to send $800 and then file an appeal. So I did do that. What process do you have after you appeal this if there's nothing resolved at that point in time? What is the next step for anyone, for me or anyone else going through that process?
Yeah. So first, again, I hate to hear that it happened to you. After January 1st of this year, that is not to happen anymore. And I skipped this over from the very first slide. Where this came about was, I think it was December 27th of 2021 was when the federal No Surprises Act was passed as a part of one of those big omnibus bills. And it didn't actually take effect until back about a month ago.
Right.
So I hate to hear that yours happened at a period where you were not covered from the protections.
Right.
I think the mediation process that we offer would be the most appropriate next step for you. And that's what we try and inform consumers about when they have issues, when they have questions, to always reach out to Commerce Insurance. So we'll follow up directly with you to put in contact about our mediation process. But broadly, the message that we would have to everyone in here, and just like the consumers, reach out to us. This is what we do. And I think from the numbers that we mentioned at the end of it, 10 million in just 2021 already, that we do a good job of it. And we'll follow up with you on that.
All right. All right. Thank you. Thank you, Madam Chair.
Are there any more questions? Yes, Representative Lafferty?
Thank you, Madam Chair. This is getting probably out there a little bit, but the dispute resolution process, I don't know how many of those take place in a given year, but if the intent is to help consumers to be protected a little bit, to save a little bit of money, if we are having dozens, hundreds, thousands of independent dispute resolutions, have we just taken the cost out of the medical side that the consumer sees and just transferred it over to us or you all as an agency handling these dispute resolutions?
So great question from, if I'm following there, about for the IDR process itself, that's not something that is handled by Commerce Insurance. Those IDR entities are separate, and there are fees that are paid in order to cover that. So it's not a direct cost that would be given on to the consumer. Theoretically, of course, that the cost for the IDR would be built into either the payer or the provider ultimately. So in the way that $50 for the IDR selection, and I think $200 to $500 is the single IDR entity determination costs, would ultimately be passed on to consumers in some manner. Yes. What I believe, though, the thought process behind the IDR is that eventually, through the settling of enough disputes, you come up with a better understanding of what those out-of-network rates properly are, and that eventually there are fewer of the IDR processes initiated. So I think from what we would expect from the federal law and what has been observed in other states, you would see an initial period of higher number of IDRs that would ultimately begin to drop off as that out-of-network rate is greater clarity is provided on it, which isn't to say that there aren't aberrations from it and that there aren't valid disagreements. But I believe what we've seen in other states, and maybe Assistant Commissioner Huddleston could add to this, I believe what we've witnessed in other states when they were in advance of the federal law and had their own, was that there was a decline after an initial higher activity time.
Okay.
Is that right?
You're recognized.
I guess the nature of my question was to just try and get the thought out there that we aren't doing a lot, perhaps at this point yet, to bend the cost, if you will. That's a term that I hear a lot around medical issues is the cost is still not transparent to the consumer. And my belief, if you don't know what you're paying for, what it costs, and some arbitrary insurance company out there is writing the check, then we don't have a whole lot of downward pressure on competition or price shopping or anything like that. I'll let that one go for now. That was just a thought. The $10 million, that does get reimbursed back from the providers. That money comes from
So
those
for a
providers
wrongful
together?
claim denial, is that from that slide that we had?
Yes. I think the
Yes.
number was $10 million.
Yeah, right.
And that money is, that's returned to the consumer from the whichever entity, caregiver, care provider.
Carrier was what,
Okay.
yeah, sorry. you might-
All right, good enough.
Yeah,
Thank
apologies.
you.
I just, it's from the carrier or insurance company to the consumer.
Okay. All right. Thank you. Just wanted to clarify. Thanks.
Are there any more questions? Chairman Terry?
Thank you. Appreciate you guys coming here. Just a couple questions. As far as narrow networks and sometimes in this process, providers may want to be in a network, but they either the rate that's offered to them is significantly lower in order to keep a narrow network, or you're just not allowed in those networks. Just wanted to bring that up that, in some plans that where there are bills or your actual bill that's going out that's sometimes labeled a surprise bill is because you've been left out of a plan for whatever reason. And to that point, can you speak on the process for the plans that fall under the Affordable Care Act, and if whether the hospital or the providers are not able to be in those plans, are they able to balance bill that patient? Can you speak to that?
Yeah, so broadly, there would be the prohibition against the surprise bills, even for the ACA plans. So like we covered earlier, that is not a ironclad rule, and there are some exceptions that we went through earlier. I'm positive there's some exceptions that we left off of here that, again, Assistant Commissioner Huddleston, from his deep engagement here, would be aware of. But to the first part of your question about the network itself and the construction of that network, y'all are aware that our ability to control network adequacy is constrained. I'm trying to choose my words here carefully because Representative Smith, I see you taking great interest here. That our authorities derives from the feds in the case of network adequacy, and so for the construction of the plan itself, it would be a contractual matter that Commerce Insurance would not be properly engaged to step into as to forcing a provider or forcing a carrier to accept a provider into their network.
I'll follow up with you. I'll have my office follow up with you. But I appreciate you being here. Thanks.
Representative Smith?
You called my name, so I get to talk.
I saw you smile.
It's all good. So yes, I did carry a network adequacy bill last year, which the department voiced its deep opposition toward. And I understand that. You're doing your job, and we're trying to serve patients. I would just simply say, what I'm hearing you say is if the most heavily weighted criterion in this panel of criteria is the in-network rate, and then you just confirmed that you don't have, or it's not the mission of the department to ensure the adequacy of a network, then what I'm hearing is we are constructing a very perverted system that incentivizes very low reimbursement rates, very narrow networks, and increasing costs to the patient. And so that is more of a statement of opinion, but I'm happy to hear yours. Thank you, Madam Chairman.
And thank you for the opportunity to clarify. I did not intend to say that. To say that what I was trying to draw a distinction between was that in the same way that for the No Surprises Act, that our authority is limited and what authority we have is coming from the feds, that network adequacy for us is also derives from the feds and from CMS. So what I was trying to draw the distinction between was our that we are loath to engage in contract disputes when it comes to a specific provider and whether or not they're in network, and that network adequacy is a component of that, but our authority derives from the feds there. And that was the distinction that I was attempting to draw. And I apologize, inartfully addressed it just now, and be happy to follow up with you later.
Are there any more questions? Seeing none, thank you so much for being here with us today. Thank you. Before we go back into session, I would like to acknowledge someone. I understand we have a doctor of the day here with us today. It's Dr. John Scott with Internal Medicine at Vanderbilt University Medical Center. Welcome, Dr. Scott. We will go back into session. Seeing no further business, without objection, we will stand adjourned.